Welcome to this week's African Agri Overview. This week we'll be focusing on the Zambian wheat market and prices that remain high. Jacques will also discuss what we can expect going forward. We also take a look at the latest poultry and grain prices in Zambia over the past month. All in this week's episode, so make sure to stay tuned. Hi, I'm Dr. Johnny van der Merwe and welcome to this episode of the African Agri Overview. Before we dive in, however, I'd like to encourage you to follow us on YouTube. By doing so, you'll gain access to regular insights into the agricultural markets of Africa. Our goal is to provide you with valuable information that can help navigate the dynamic world of agriculture on the African continent. You can also contact our regular market analyst Jacques for more detailed reports on the African soft commodity markets. Brent crude oil prices have dropped again and are now trading at $90 per barrel. Oil prices, however, remain on relatively high levels due to low supply from OPEC mostly and improved demand over the past month. The kwacha also weakened over the past month, mostly due to the US dollar that gained a lot of momentum. The latest exchange rate is currently trading on 21.05 kwachas per US dollar. Looking at poultry prices, we saw these prices increasing mostly due to the weaker exchange rate and better export demand. The day-old broiler price increased to 15.83 kwachas per head, while day-old layers increased to 17.67 kwachas per head. Live layer cull prices increased to 62.33 kwachas, while live broilers increased sharply to 108.33 kwachas per head. The average egg price also increased on the back of better export demand, now trading on 53.67 kwachas per tray. The latest maize prices in Lusaka trade lower, however, on $350 per metric ton. Soybeans decreased to $420, while the latest soy meal price also traded lower on $425 per metric ton. Wheat prices, on the other hand, increased again, now trading on $540 per metric ton, and Jacques will now tell us more on why this price is so high at the moment. Over to you, Jacques.
Good day and welcome to this week's podcast on the Zambia wheat market. The harvest campaign is probably 30 to 40% completed, with around 80% of the crop already contracted. Local wheat prices remain rather expensive. This graph illustrates our wheat production and local consumption estimates for Zambia the past 6 years and our forecast for the 2023-24 season, the crop currently harvesting. Market expectations continue to be a record crop for the third consecutive year. There were concerns the early growing season did not experience cold enough temperatures, and this might be negative for yields. However, yields reported so far do not reflect those concerns. Yields are good and quality seems to be above normal. Also, the harvest process is ahead of the usual pace due to the prevalent warm weather. Crop estimate seems to be creeping higher, with most in the 420 to 460,000 ton range. We are using 440,000 tons. We expect national demand at around 300,000 tons, with the surplus being exported as wheat flour, mainly to the southern DRC. During the last few years, Zambia has been a net importer of wheat, as the locally produced exportable surplus was not sufficient to meet the DRC wheat flour import need. However, as indicated before, the DRC typically has two wheat flour import options, either Zambia or Tanzania. Tanzania produces very little wheat and imports their entire need. When Zambia prices become relatively expensive, it pays Tanzanian millers to import wheat, mill it, and export the wheat flour to the DRC. During the last few years, Zambian wheat flour was competitively priced, and this origin supplied the majority of the DRC need. This season, Zambia prices are relatively expensive, and we are hearing more and more speculation Zambia could lose wheat flour market share to Tanzania in the southern DRC. With a record expected crop, the need for imports could be small or non-existent. Observers guess around 30% of wheat milled in Zambia, locally produced and imports, were exported as wheat flour to the southern DRC the past few years. Guesstimates, Zambia exported the equivalent of close to 150,000 tons of wheat as wheat flour to the DRC during the last 2 marketing years. In the last podcast, we did touch on the Zambian government's use of import levies to protect the local industry. Import levies were reintroduced during August, just prior to the local crop harvest, which is typical for Zambia. Import levies are normally removed between May and August when Zambia has an import need. All imports carry a surcharge of 5%. But non-SADC imports, typically deep sea, carry an additional 15% import levy. This graph indicates both deep sea and South African import parity for the past 3 years relative to the local Zambia price. Zambia prices typically follow South African import parity when import levies are charged. However, current prices are at deep sea import parity, i.e. quite expensive, see the brown circle. Almost the entire deep sea import levy being discounted into the market price. As indicated above, there is a possibility imports might not even be needed. The next graph shows the wheat price history for the last 6 years. Import parity during harvest time the last 3 years for deep sea and South African origin indicated by the blue and red lines respectively. For both the previous years, Zambian prices traded well below import parity during harvest time. See the brown circles. However, this year, trading well above South African import parity and at deep sea import parity. See the grey circle. Zambia wheat prices seems expensive, currently trading at $540 a ton, delivered Lusaka. The Zambia wheat price could be close to the top of the price cycle. If international prices move lower, Zambia prices will need to follow to protect the DRC wheat flour export market.
Thank you very much, Jacques, for sharing such valuable insights. For those seeking more detailed information and comprehensive reports on sub-Saharan African soft commodity markets, I encourage you to reach out to Jacques Pinaar. I'm Dr. Johnny van der Merwe, and thank you for watching.